Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our daily technical analysis, updated commodities, work our way through the dollar, yields, precious metals, commodities, ETFs that I follow. I'll interject my financial opinions as we go. And if you need help with anything, check out finding-value.com where I dive deeper into these topics, deeper into the individual companies, share my opinions more freely with those companies, and you can see how I'm positioning in the portfolio that I am accumulating. So let's dive in there today and see what's going on in the markets today. We're going to start with the DXY, and this looks strong for the DXY. We had interest rates absolutely storming to the upside. Big move there. To me, this looks like we're trying to flirt with a potential breakout to the upside. That one does not look like it's the right angle, but we are turtle heading out a little bit of that trend line, and it is only 2 points. It's not a strong trend line. Some may argue that it's not a trend line to begin with, but we had a massive big day today. It is a bullish engulfing, as far as I can tell, of the candlesticks before it, which indicates that we could see a move higher over time. A lot of the times you'll get a little bloody nose as the next candlestick. Something on the lines that looks something like this one or this one. That occurs quite a bit, but it's generally a leading move um, for a potential move higher of these big green candlesticks. So the green army is looking like it's showing up, and it is above the support levels here and here. So this could very well take off to the upside here at any second. We also got a hammer candlestick on the weekly. What does this mean? It means potentially stronger interest rates, stronger dollar, and that correlates with what? Energy. Energy stocks. We see energy and rates move together, and they are highly correlated. With rates going up, and if they continue up, and I'm not stating that it's 100% in the bag we're going up, but if they continue to go up, we're going to see the DXY go up, which we are seeing indications of strong formations for higher DXY. And the correlation of oil and dollar and yields going up are strongly correlated. And precious metals may have a little bit of a headwind or a big headwind, depending on how fast those yields go up. So we'll have to monitor it. 2-year yield, absolute huge move today. Look at the move here. Yeah, I know some information was released. Keep in mind that that information they release could very well be doctored. They may want interest rates to remain elevated. So big move today. Big move. Now, this caught me by surprise, the size of this move. I was like, wow. We had another big move back here as well, and another at this bottom here, breaking a downward trend line here. So to me, I mean, we're still in the pattern, and it still looks strong. We could have a little bloody nose tomorrow, or I mean, next week, Monday. But big update on the 2-year, big update on the 10-year, bouncing off support. That horizontal support line is what I'm talking about there. And we are back within the pattern, giving a big wick at the bottom, signaling that we are still above support, even for that potentially falling wedge. And then the 30-year is doing something very similar to the 2 and the 10. Big update, 2.5% increase in the 30-year yields, bouncing off that horizontal support area. TYX TNX ratio, it is inverting. And with yields going up and this ratio inverting, and the size of the inversion on top of the size of the move of interest rates in the dollar, precious metals are not going to like that. They are not going to like that. So we are continuing to remain inverted, and we have not started our way on up for that uninversion. Bond prices getting smoked. We went to resistance and we pulled on back for bond prices. We are still underneath resistance. And on the weekly or monthly candlesticks, it still looks a little bit bearish. This very well could play out with a decline in bond prices and an increase in interest rates. It's still on the table. 2-year, 10-year yield working its way on sideways, but we are still inverted. This yield curve has not become inverted, at least not yet, signaling that a potential recession and a recession is getting closer when this really starts to dive lower. Gold getting a total shellac in here, down $85 an ounce. This is a bearish engulfing, and it does look like we could continue lower. This is also evidence of why I think rates could continue higher, because gold is playing along with the increase of rates. And what we started here was a larger selling pressure move. This here is that inverted flag pattern, and then we've broken out to the downside. So we could see further downside in gold prices in the short term with increasing interest rates. Silver also playing a lot of selling pressure, 6.6% down, and we could see a potential sideways or lower price action in the short term. Does this big selling pressure move negate the breakout? No, it doesn't. We should still remain bullish, even though we had strong selling pressure in the short term. Platinum also down about 4%, and this still looks like we could see further downside. I thought we had a good chance of breaking out if yields were to decline, but you know what? They didn't decline. They shot higher, and we could see this pull on back to my favorite buying areas down here if we get down there again. Palladium also down, but that's against support, and support is still holding at this moment, and it is trading sideways. XEU to gold ratio also feeling it pretty bad. I mean, we had a pretty big move lower in gold. XEU to gold ratio underperformed by 2.75%, which means we had a pretty big down day for that to occur. And we've broken the trend line. I'm still favorable on XAU to gold going higher, but we are getting some selling pressure here in the short term, definitely. So we go to GDX. GDX is selling off. We're right at support. Maybe it'll breach it and head a little bit lower. I think a lot of this depends on yields, and I don't think a lot of people in the government or even the Federal Reserve wants to see this move. They don't want to see anything precious metals related move. So we're getting a little bit of a pullback here, and this could continue lower. We've got lots of momentum behind this move, down 7% almost for GDX. GDXJ 7.5%. Heading on lower. And this is all attributed to what interest rates are doing and the yield curve and how that yield curve, the TYX TNX ratio, is moving, in my opinion. SILJ also getting pretty strong selling pressure today. The winner in all of this, and I still think this will be the winner, will be crude oil. Crude oil and interest rates move together, and maybe there is something stacking up here where Powell and Saudi Arabia, OPEC, all those guys over there, maybe they see something that the normal people don't see. Maybe something to do with credit expansion, maybe something to do with supply and demand, because they are going to roll back those OPEC cuts. I don't think they're going to do that into weakness. I think they're going to do that into strength. We do have a big selling pressure move, a little bit weaker bounce. I think that we are going to trade a little bit sideways, and then we'll see if we can get some upside momentum for crude oil. And we do have support underneath us. It is a 3-hump consolidation. It looks kind of ugly here. I won't lie. But we'll see if we can get some support right in the corner here. We might go sideways for a little bit longer and see if we can break this thing to the upside. We've got TTF gas down a little bit. But again, guys, I remain bullish. There's not huge selling pressure here. We have support all underneath us here. And I think we're going to be going up over time. I'm not saying like vertical moves like this. I'm just saying that we could grind on up, work our way on up for over time. Natural gas in America, I guess I retract that statement. Geez, look, we're breaking out already at this big, strong resistance level. The resistance level is this level going across. Once you get above that, the resistance kind of fades out. We're getting above that, and the resistance is fading out. So this is a consolidation period right at the resistance level, and we're breaking that to the upside. So nat gas actually looks pretty strong in America. Our boy XOP, yeah, you know me. We've been trading sideways right at that support resistance level. Kind of right at this line here, but I'm going to put it like it depends where you put this thing. You can put it all somewhere in that general location of right where we're at. And we'll see if we hold here. If we see strength in oil, there's no doubt that XOP is probably going to start to strengthen here. If there is a potential slowdown, which you'd see the 2-year yield drop, that's where I would gain, this would go down with the 2-year yield. The 2-year yield went up. Now I'm looking for support here and seeing if we can get a big green candlestick to head on out of here. Yields are what I'm looking at to justify that type of movement. OIH putting in a bullish engulfing today, and we'll see if we can get some momentum to the upside, and we're at support. There we are at the support line going across. So we'll see if we can hold here and if yields fall into place and all that other stuff. The uranium Sprott Physical Uranium Trust, this still looks very weak. It is selling off to the downside. Even further, this could be a retest return move from this gigantic breakout, and now we're getting a return move. I am still incredibly bullish on uranium, even though in the short term it is bearish. So short term, I think we're going lower. Longer term, when it ever bottoms out here, it's going to be an excellent entry point for a move higher. Now you guys know on the website why a lot of the uranium stocks have been kind of iffy on in the short term. URA, also some selling pressure going on, and that could continue. It's a pretty strong selling pressure candlestick today. We've got that URNM as well, coming back to support, and URNJ also seeing some strong selling pressure. What would I do if this breaks down here and we start to see it trend sideways? I would be bullish. I would actually buy a bunch. That's what I would do. But I do think that we could go down a little bit. With this momentum, we'll look to see if we can get support in this 24, 25 range, and then we'll go from there. If we continue to slice through support with large down candlesticks, the ones like today, there could be further downside. TAN down a little bit, coming back from that resistance level, just pulling on back. We've got a big down day in copper. We broke the uptrend line, and I've been bearish basically from here. Whenever you see these really large down candlesticks, that's a lot of selling pressure force being applied to the stock. And a lot of the times it can't overcome that. It's like sellers want to get out. So we could see further downside in copper in the short term. It does not change my view on the longer term, and we could see this pull back a little bit more, or even down here for a retest of the breakout. COPX also selling pressure down 4. And we're at a little bit of support right where we're at. We've got lithium down 2.82. This one is heading a little bit lower, and it looks like we're heading towards this area in the 36 range. Maybe we get down there for a full retest. But again, I look at this from a big picture view, stage 1, stage 2, breakout, retest. This is your ideal buy point right there if you are playing markets for the long term. REMX doing the same thing, except this one's had an extended move lower. And it still looks a little bit weak, down 2.77. Why is that the case? Well, I mean, people think that each of these sectors are being driven by the fundamentals of all these sectors. I am telling you that the financial macro picture has a bigger deal on the pricing of a lot of these assets than what most people think. These things are financialized. These that are sensitive to declining interest rates, we just saw a monster pump to the upside of interest rates. I have a feeling that interest rates and the dollar are going to continue higher. And under those conditions, REMX and lithium and agribusiness, they might not like the increasing interest rates. So this is a bearish pattern, and it looks like we could go down further in REMX. S&P 500 flat, surprisingly, and that still has a pretty bullish setup. We've got the NASDAQ also flat and still in a pretty bullish setup, in my opinion. We've got the Russell 2000 down 1.1%, and it's looking a little bit weak. We've got this retest here, the breakout, and that has downside pressure being applied. KRE probably doesn't like those increasing interest rates, but it is holding on today, actually quite resilient today in that support level as we are still holding. Emerging markets, it's not going to like this. So that's down today, down about a little over 1%. XHB is not going to like it, down a little bit over 1%. We are in a housing market, bull market, and I think a lot of people think, oh, we're just going to be in this huge bubble. We need inventory for that bubble to materialize if you're in the bubble camp. But right now, yeah, we're getting a little bit of selling pressure here with those increase of interest rates, and that's pretty much what I would have guessed with an interest rate move as big as it is. But it's only down 1%, and it's holding. Lots of support in this region of the $95-ish range. Move down 1%. The setup looks absolutely fantastic here. I like how we came on down pretty well coordinated down here. And then we're just kind of sitting right on the support level. The support line going across. We're like right above it. So I do think that this could be a good buying opportunity in some of the stocks here. Now, will interest rates overpower this? Not necessarily. If interest rates go up, I've seen a lot of particular agribusiness like sectors do well in those types of environments. Iron ore down a little bit. It's just a small little down day. Still looks like it's trying to bottom here. Like basically we're putting in like a double bottom perhaps. What I would do is I'd move this up here, go across there, and perhaps what we've got is a double bottom playing out. We've got nickel down 1%. All of these are sensitive to interest rates. And the movements, I mean, today was a very large move. So these are all digesting the difference in the interest rate going up. Same with aluminum. So these base metals, copper, aluminum, nickel, iron ore, they are sensitive to the interest rates. And this does look pretty bearish with that interest rate move and aluminum and them breaking some of their support levels. We could see it further downside in the short term. Baltic Dry Index up a little bit. It's up about 1%. This still looks good to go up. So we're right at support, looks good. Newcastle Coal Futures down a little bit. But again, I'm going to remain bullish because sideways to higher is where I think breaking this downtrend. It's also a retest, breakout retest. So in this general area, I like it for a long-term investment. Bitcoin doesn't like stronger dollar, stronger yields, pulling on back a little bit. Ethereum also pulling on back, and we'll see if there's any follow through here and what yields look like. Right now, it's too early to determine if this is going to be an actual return move because we've got these big wicks on the bottom. These can still be saved. SMCI down a little bit, but still looks good because we've got a bunch of small red candlesticks right in these two big green boys there, and basically it's a return move back to the beginning, so that's getting some support. Could still go higher. And then NVIDIA, we were sideways today, and the momentum is still to the upside for NVIDIA. But that's what I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. We still have that coupon code Mayday going on. Bigger savings on the yearly membership. 50% off in the first month if you want to try it out. And then it goes to regular pricing after that first month. We've got a Saturday question and answer session at 7 a.m., which is tomorrow. So don't forget to, if you're part of the website, don't forget to put that on your calendar. Love to see you there. We can talk about whatever you guys like. I do have a little bit of a little bit of an explanation of my strategy and why I choose some of the companies that I do. I'm going to get a little bit of math behind it. It's not anything complicated, to show you why I do it and some of the reasoning behind it, of basically putting together a portfolio and why I choose certain companies over other ones and why I might weight the companies bigger versus a little bit smaller in other ones. So we can go into that. I think there's a lot of value there, actually. And I would attend if it were me, and I would ask questions if you guys have any questions. So that's what I've got for today, guys. And hopefully you're holding strong. Commodity bull market is still alive and well. And I'm still in the camp that precious metals look very good on the long term. All right, guys. We'll catch you later. This is Finding Value.